Imagine a time 400 years ago. The year is 1602. The world felt much, much bigger then. It took months, sometimes even years, to travel across the great oceans. But people were brave. They built massive wooden ships to sail into the unknown. They were searching for treasure, not gold or jewels necessarily. They were after something just as valuable. They wanted spices. Nutmeg, cloves, and pepper were the tech gadgets of their day. They made food delicious. They showed you were wealthy, and they came from faraway lands, the places we now call Indonesia and the Spice Islands. Controlling this trade was the key to immense power and riches. One group of people understood this better than anyone. They were the Dutch. They formed a massive company to do this. It was called the Verenigde Oostindische Compagnie, or VOC. We know it as the Dutch East India Company. This wasn't just any company, it was a behemoth. It had the power to build forts, to sign treaties, and even to wage war. Its goal was simple but incredibly ambitious. It wanted a complete monopoly on the Asian spice trade. It wanted to be the only game in town. But there was a cosmic-sized problem. Building and launching these enormous fleets was fantastically expensive. A single voyage was a huge gamble. You had to pay for the ship itself. You had to hire a large crew of sailors. You needed to stock the vessel with enough food and water for a journey that could last for years. And then there were the dangers. The solution the VOC came up with was brilliant in its simplicity. It was an invitation. They turned to the public, to the ordinary citizens of the Netherlands. They went to the bakers, the blacksmiths, the shopkeepers, and the clerks. They said, "Do you want a piece of the action?" They offered a deal that had never been seen before on this scale. You could give the company your money to help pay for its voyages. You wouldn't be just loaning them the money. You would become a part owner of the company itself. You would own a tiny fraction of the ships, the cargo, and the dream. This was a radical concept. For the first time, you didn't have to be a powerful merchant or a nobleman to invest in global trade. You could be a regular person with a little bit of savings. If the company's ships returned safely loaded with valuable spices, the company would make a huge profit. And because you were a part owner, you would get a share of those profits. This payment was called a dividend. It was your reward for taking the risk. Your small investment could turn into a much larger sum of money, all thanks to a successful voyage to the other side of the world. People were excited. The idea caught on like wildfire. Thousands of citizens lined up to pour their savings into the VOC. They were buying what we would now call shares of stock. Each share represented a tiny slice of ownership in this massive enterprise. It was a way for everyday people to participate in something much bigger than themselves. They were funding exploration and commerce. They were betting on the future success of the company. Of course, the risk was still there. If a fleet was lost at sea, the company would lose money. And if the company lost money, so did you, the investor. But the potential for reward was so great that people were willing to take that chance. They understood that by pooling their money together, they could fund something that no single person could. Now, a new question arose. What if you invested your money in the VOC, but then you suddenly needed that money back? The voyages took years. You couldn't just go to the company and ask for a refund. This created a need for something else. It created the need for a market. A place where people who owned shares could sell them to other people who wanted to buy them. This wasn't a physical shop with goods on a shelf. It was a place for trading pieces of paper, for trading ownership in an idea. This was the birth of the world's first stock market. It all happened in Amsterdam. In a courtyard, and later in a dedicated building, people would gather to trade their VOC shares. The price of a share wasn't fixed. It moved up and down based on the laws of supply and demand. If good news arrived, like a fleet spotted on its way home full of spices, more people would want to buy shares. This high demand would push the price up. Everyone felt optimistic. The future looked bright. People were willing to pay more for their piece of the company because they expected bigger profits to come. On the other hand, bad news could make the price crash. A rumor of a shipwreck or a pirate attack would cause fear. People would rush to sell their shares before the price dropped even further. This panic selling would flood the market with shares, and with so much supply, the price would plummet. The value of a share became a reflection of public perception. It was a measure of the collective hope and fear of all the investors. It was a living, breathing number that changed daily, based on news and rumor from across the globe. This system was a game changer. It created liquidity. That's a fancy word that means you can turn your investment back into cash relatively easily. You no longer had to wait years for a voyage to end. If you needed money, you could just sell your share to someone else on the open market. This made investing much more attractive. It gave people flexibility and control. If you look at the stock market today, you can see the ghost of the Dutch East India Company everywhere. The basic idea is exactly the same. Companies still need money to grow. A modern tech company might need cash to build a new data center or to develop a new piece of software. A car company might need funds to design an electric vehicle. Just like the VOC needed money for ships, these modern companies need capital to fund their big projects. They need fuel for their journey into the future, and that fuel is money. So what do? They do what the VOC did, they go public. They offer shares of their company to investors on a stock exchange, like the New York Stock Exchange or the Nasdaq. When you buy a share of Apple or Tesla, you are doing the exact same thing a Dutch citizen did in 1602. You are becoming a part owner of that company. You are betting on its future success. You believe its leaders will make smart decisions, that its products will sell, and that the company will become more profitable over time, increasing the value of your share. The technology has changed, of course. We no longer trade slips of paper in a courtyard, we trade digitally at the speed of light using computers and smartphones. But the core principles are timeless. The prices of stocks still go up and down based on company performance, news, and investor sentiment. Good earnings reports push prices up, a new product failure can send them tumbling down, we still receive dividends, our share of the profits. The stock market remains a grand collective system for spreading risk and sharing in the potential rewards of business innovation. This invention from the 1600s is fundamentally important for everyone's financial life today. It's how our retirement funds, like a 401k or an IRA, grow over time. That money is invested in a diverse collection of stocks, allowing our savings to participate in the growth of the entire economy. The stock market democratized investing. It took the power to build wealth out of the hands of a select few and gave it to everyone. It's a powerful tool, born from a need for spices and ships, that continues to shape our world and our financial destiny. It's a connection that stretches across the centuries, from a bustling port in Amsterdam right into the palm of your hand.